How will the Bitcoin market develop? If you're interested in knowing more about this, please keep watching. Tomorrow, May 6th, a quantitative seminar will be held at Kaohsiung Palace's Century Hall from 1 p.m. to 4 p.m. with free admission. Sponsored by BitGet. We welcome friends from Kaohsiung to join us in the seminar. There's a registration link below, and admission is free. Also, we'll be giving away fine merchandise, and there'll be a lucky draw. All right, let's get back to the market. As of now, we're looking at the 4-hour candlestick chart because there's some noteworthy information in this chart. First of all, I can easily draw a definite trend line. On the trend, there are touch points along the line. Besides, every touch point perfectly falls on resistance without any false breakouts or crossing back and forth. Hence, I believe this trend line is highly effective. Even though there are spikes, I think it's totally acceptable. Spikes in the market are normal. As for the support, likewise, I can easily draw a trend line here. So, we can observe a converging symmetrical triangle from the trend. Speaking of this triangle pattern, it's pretty simple. In terms of the pattern, if the price action breaks through the resistance, we can go long. If it breaks below the support, we can go short. The thing is, we ought to be careful and watch out for fake price action, as it frequently happened previously, especially during the ongoing market. The current market is oscillating. No trend is established yet. Let's say the price action of the earlier time goes bullish, then develops into a converging symmetrical triangle, and lastly, it breaks out the resistance. This is when we should enter with a large position. However, there was a choppy market earlier, and many false breakouts occurred. This leads to doubt, and at least we should be careful about the price action, as it may also be a false breakout. First, we should observe the trading volume and how we open a position. Besides, regarding the ongoing pattern, you can see the distance the price action travels is already very close to the end of the converging pattern, right? In this situation, if the breakout happens at the very end of the pattern, the direction of the price action won't be considered a real one. When the converging pattern reaches 70 to 80% completion and price action breaks through, it's usually the correct one. However, if the price action develops slowly into a direction when the pattern is about to conclude, it's likely to be a fake one. After all, we've witnessed many false breakouts before. The market is currently oscillating, so it can't be considered a trend. I believe we all agree on this. Next, I'll highlight these patterns from the earlier trend. First, you can see there's a diamond pattern in the previous period. In the diamond pattern, the price action reaches both the highest and lowest points, signifying a reversal of the trend. The diamond pattern itself is very subtle, with a perfect and definite border. Right after the price action breaks below the trend line, it rebounds, which is unpredictable for traders who rely on technical analysis. You can see that it rebounds right after breaking below the trend line. Next, if we analyze the trend technically, we can see the previous price action is a fake one, but it's fine. Let's take a look at this. This is an obvious resistance. You can notice that the price action touches it several times. Every time the price action touches it, it falls back down. And it happens several times. Is this coincidental? Definitely not. It must be a sell-off here. When the price action breaks through the resistance, technical traders will buy or go long at the point where the breakout happens. However, the price action shows a quick drop back to the support, which the precious resistance level. The price action falls back to the original place. This is bad news for traders. After so many fake outs, it has one more. That's faking a bullish trend. Going long during the breakout, which is very fine. But it fakes a bullish trend by developing a false breakout, and it falls back again. The resistance level also fakes a bearish trend. What does that mean? So how do we identify a bearish trend? Like this. This is the correct way to identify the bearish trend. I'm not speaking from hindsight. We can only look at the trend of the later period. It develops into a price channel. Why do I call it a price channel? Of course, I should draw the trend line, which is the boundary of the pattern. Okay, you can see. It's a price channel. Well, at the end of the channel, the price action breaks below the support, and traders will enter a short position during the breakdown. However, the price action rebounds. Besides, there's significant price volatility. In the middle, no matter how the traders place their stop-loss orders or what method is used to minimize the loss, such significant price volatility will trigger all the stop-loss. So the current market is a market with a lot of fake-outs and shakeouts. A trend is going to establish in the ongoing trend. Yes, it's approaching the end of the pattern. However, we need to be very careful about the direction of the trend, whether it's a real one, and whether the trading volume is sufficient. These are very important decisive factors. Next, we don't have to enter all positions at once during the breakout, because there are 2 points that can help us identify the trend. Let's switch back to the daily candlestick chart. On the daily chart, there are 2 points of great significance. What are they? First, it's up here, according to the price range shown by the exchange. It's 31,050 US dollars. If the price action breaks through 31,050 US dollars, I reckon the congestion area is favorable for the bull market. Okay, if the price action breaks below 26,525 US dollars, at this point, I think it's favorable for the bear market. So, if the price action breaks through the upper boundary, the price action will break through the pattern before the upper boundary. When the pattern is broken through, we can add some positions first. And then when the upper boundary is broken through, average up the position. On the flip side, if the price action breaks below the pattern, we can open a short position. And when it breaks below the white line, average down the position, making the trade more confirmable. Yes, the price may not be good. Still, it's a safer plan. I think the current trend is surely worth a trade, because we have seen too many fake outs earlier. Okay, let's proceed to the 1-hour candlestick chart. On the 1-hour chart, we can see an ascending channel. Look here. The trend develops in an upward manner. Whoa! The upper and lower boundaries are distinct. If the price action breaks below the support, the target price will be at the lowest point of the price channel, around 27,600 US dollars. You can take it as a reference. Okay, you're very welcome to join us on May 6th, which is tomorrow, at the Lynn Palaces Century Hall. I've prepared an informative sharing, and BitGet Exchange has also prepared a lucky draw with a lot of wonderful gifts. Plus, you'll expect a mystery event as well. Alright, thank you. You're welcome to like and share my videos and subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye-bye.